Washington this week. Credit card companies are facing a threat of additional regulation from Capitol Hill, and today credit card executives are being asked to come to the White House to meet with President Obama about their rates and their lending practices. Pam Banks, what is the Consumers Union view of this?
We think it's a good thing. And in fact, the passage of the bill yesterday in the House, this is the Maloney bill, was a good day for consumers. And when I say it's a good day for consumers, I'm talking about all consumers, no matter what job you have, no matter where you live, how many children, or whether or not you even supported this bill, they will all benefit from the bill.
How so?
Well, the bill attacks or makes it certain that some of the abusive practices that we have seen over the years will no longer be the case. For example, we've heard many consumers complain about the increase in interest rates with no notice. Under the bill, issuers will be required to give you 45 days notice before they actually charge you a higher interest rate. A simple thing as payment, you will be given, one bill gives you 21 days and another 24 days to make your payment, or the credit card company has to send out that bill 24 or 21 days before it is due, rather than the current 14 days that is there.
We just heard from a representative of the financial services industry who said the Federal Reserve in January had new credit card rules, which they published for the industry. They're saying give those rules time to work before additional regulation or legislation is imposed upon them.
Well, we have two views. First is, while the July 2010 date is the date that the federal rules were to apply, while on first glance it may seem reasonable, what we have seen, unfortunately, is that a lot of credit card companies are increasing their rates and fees during the interim. So our point of view is that we need reform now in order to stop some of the practices that are still going on. And the second point that I would make is that while we advocated for a sooner implementation date, we think it's important that if we can't get the original 3 months, that we get it done as soon as possible, soon as practical.
We would like your comments or your questions on this topic of additional regulation for credit card companies, whether or not you think it's a plus or minus for the current state of the economy and for you consumers. And we'll get to calls in just a couple minutes. The phone numbers are below me on the screen. A place that page that is against this is the editorial page of the Wall Street Journal. They have, as their final editorial today, political credit cards is the headline on it. They write, credit card issuers are the companies that consumers love to hate, which makes them an easy populist target. But despite our conflicted relationship with the card companies, Americans enjoy some of the best and easiest access to consumer credit anywhere in the world.
I would say that we have to stop this notion, I think, that credit card companies are inherently bad. They are not inherently bad. They provide a valuable service to consumers. It's very helpful to have a credit card if you are making big purchases or in times of emergencies. What we're saying is that we went through a period where it was very easy for consumers to get credit cards. The average household has maybe 36 solicitations to open credit card accounts. And if you open that account, you may find yourself tripped or trapped with excessive fees and interest rate hikes that really doesn't help the consumer manage their credit.
Here's how they close their editorial, and then we'll go to calls. They call what's happening this week a credit card dog and pony show. And they say it's not about helping consumers. It's about, once again, blaming bankers for what ails the economy, even if the political class is partly responsible. Our politicians, the Journal page writes, spend half of their time berating banks for offering too much credit on too easy terms, and the other half berating banks for handing out too little credit at too high a price. The bankers should tell the president they'll start doing more lending when Washington stops changing the rules.
Well, hopefully, you know, with the new statute or the new law that will be passed, it will be pretty much settled as to what those rules are. And then second point point I would make is that there has to be a balance. Certainly, we are not advocating that you just push credit out there. I think consumers have a corresponding responsibility to be responsible with their borrowing. Don't borrow unless you can afford it. If you have to use your credit card, be able to pay it off as soon as the bill comes, rather than allowing it to increase interest and fees.
Let's go to calls, beginning with Washington, D.C. This is Carolyn, Democrats line. Good morning, Carolyn.
Good morning. I have a question, but I also have some information that I would like to pass on to all consumers. Most time people, they pay more attention to when the bill is due, but they never pay attention to their closing date on their bill. And the closing date, what I have found out is that well, I'll give an example. It's just like on your closing date, for example, my closing date is like on the 2nd of each month. So I definitely do not make a purchase until maybe like the 3rd. And therefore, whatever I make that purchase, it will not be on that bill. It'd be on that, not on the next month's bill. It may be on like the July's bill. So a lot of people don't pay attention to that. And another thing is just like when like the minimum payment is due. Say, for an example, that if your minimum payment is $50, so you never should just pay just minimum, but you should always pay more than minimum. But just say, for instance, if you want to pay like $100, you should pay the $50 so you won't incur a late fee, but then you don't send the whole $100 at one time. You wait 15 days, and then you pay the other $50, so that'll be your $100. So therefore, when you do that, you're lowering your finance charge for that month.
Now, Carolyn, let me ask you a question. It sounds like you're someone who monitors your finances pretty closely.
Yes, I do. I don't carry over a balance. I pay mine off, and that way I know each month how much is on my bill, and therefore I'm going to pay it off in full.
May I ask you a question then? You are in control of your own finances. Do you believe that there additional regulation is needed for credit card companies?
Yes, I do, but I also feel that consumers definitely need to be informed, and they can, regulate their own fate and their own finances. And if they just, pay attention to that closing date is just as important as that due date, because therefore, if you pay attention to your closing date, you'll be able to regulate how much money that you can afford to spend on that credit card. And then the next month, just say, for instance, that...
Carolyn, I'm going to jump in because you explained that for us and we don't have much time, but thank you very much for calling in this morning.
First of all, let me say, very, very, very good on your part. It's excellent to hear that you pay strict attention to your credit card bills. That's very good. And in fact, I would recommend that all consumers open your mail and read your mail. You'll be surprised that oftentimes that's notice. The credit card companies will send you notice that they will increase your rates, or will charge an additional fee that you may not agree with, and you would have an opportunity to challenge. But if you don't read it, you don't get that opportunity. The other thing I would mention too is that it's very good that you notice when your payments are due. Under the bill, you would have 21 or 24 days, depending on what actually passes, to pay your bill. And that bill would be due 5 o'clock Eastern Standard Time rather than 7 o'clock in the morning or whatever your credit card company may currently be doing. And then the third and final point I would make is that under the proposed rules, there will be a greater effort to make credit card companies disclose the actual cost of a minimum payment. And that is to say, under proposals that are circulating, either there will be a toll-free number that you can call to find out what your minimum payment will result in if you carry it out, or it will be in writing sent to you. But again, you have to read it.
Our next question or comment comes from Iverness, Florida. Joseph, Independent Line.
Good morning, ladies.
Good morning, sir.
I would like to say, I wish somebody could explain to me a situation. My son wanted to borrow some money to start a business, $50,000. No bank would give him a loan because he didn't have any collateral. But the banks will give anybody a credit card without collateral. And they they induce people to spend money, I believe, more than they can afford. I always figured if you can't save up money to buy something and you put it on your credit card, where are you going to get the money to pay it?
Well, thank you. Again, referencing our last conversation on this, the argument made by the financial services industry is because it's non-collateralized debt, that's why the rates are higher.
Well, I don't know if I totally agree with that. I think increasing rates and fees is a way for many of the banks to increase their income. And with respect to the caller, I would note that all the underwriting that should be done with respect to credit cards should do an evaluation of a person's ability to pay. If you cannot pay, you should not be opening a credit card or using the credit. We saw that happen with respect to the mortgage market, where credit card companies were pushing the credit, and it's enticing. You see, offers for a credit card, and you tend to want to open it and open a charge account, but that could be the problem.
A new way that there are enticement, it's not so new, but another way that people are enticed into opening credit cards is by shopping at their favorite stores, where as you check out, there's an enticement to sign up for the company credit card, actually increasingly tied to a major credit card company, and then you'll get a big savings on your own purchase. What is your view of that kind of enticement for?
Personally, I never do it. Because generally, if it's enticing you to open an account, you may get a good interest rate initially, but ultimately that interest rate will be raised. In fact, I have a friend who had a Sears card, and the Sears card, I think, was backed by Citigroup or a major credit card company. And when she was late on her Sears card, of course, they reduced her credit limit as well as increased interest rates. So now she's in a fix because she's looking for a job, and this may adversely impact her credit score.
Next call is from Beulah, Michigan. Jim, good morning.
Yeah, good morning, ladies. I do have a question for you. Actually, two of them, and a comment. Comment is that there used to be a law, if I'm not mistaken, where if your payment was postmarked, that was considered the day it was paid. And a lot of credit card companies, it was found that they were being delinquent and going to their P.O. box to get their payments. So what would happen is when they would get the payment, that's when they would mark it paid and then charge these outrageous late fees to all of us card holders. Now, the question I have is this law still in effect? And if so, how can one go ahead and invoke it? And the other thing is, where are we going to place ceilings on the interest level that these credit cards charge? I mean, 29, 30%, that's getting close to pretty much loan sharking. And I would like to hear an answer to two of those questions, if you would, please. Thank you.
Sure. Thank you for your comment. With respect to the postmark, I can't tell you whether or not what the current law is, but I can tell you that under the Maloney bill, you would have 7 days to submit proof that you paid your credit card bill on time. So that if you mail it in and for whatever reason it's deemed late by the credit card company, if you have a return receipt or something to show that you actually mailed it on time, then you would not be charged a penalty.
Next call is from Bedford, Texas. Good morning, Bedford. This is Kim, Democrats line.
Hi. I think education, especially young people on credit issues, I don't think they get enough education from home or school. I don't know where our antitrust laws have been for ever so many years. But one question I wanted to ask the previous, and maybe you can also answer it for your organization, is how much does your organization spend lobbying Congress? I think for the previous caller that would have been most important to know.
That's an interesting question, and a question that I did not anticipate, so therefore I cannot give you a definitive word. I can only add that all of our lobbying is on behalf of consumers. That's our only focus. If you would like further information as to how much is actually spent, contact me at Consumers Union and I will try to find that information for you.
What about our first comment about better education on credit in schools?
Education is always, always, always the key. The sooner children know about managing their financial affairs, the better.
Next call for Pam Banks of Consumers Union is Mountain Home, Arkansas. This is Laura, Independent Line. Good morning, Laura.
Good morning, and thank you for C-SPAN. You do provide a terrific service to all of us.
Thanks so much.
Ms. Banks, you called the credit card industry that they provide a valuable service to the public. This may be a dumb question, but who decided that credit cards were a must item? Why can't one pay for an airline ticket with cash alone? Cash is what it is. It's cash. To be forced to pay with credit cards ends up costing the consumer additional monies. So the credit card industry is the winner, and we get the shaft. Seems to me like the credit card services serve only themselves, and I hate to be so brutal, but that's how I feel.
I have a question for you. If you went back to paying in cash, I guess you'd have to go in person to airports or travel agencies to pay for them. Then those companies have to actually go to banks to deposit the cash, which would probably incur them more fees, which would probably be passed on to you. I mean, that was the argument for electronic use of finances. What's your perspective on that?
I don't know that I can fully digest that. It doesn't. We all have to go to the bank. I mean, what is? I don't know.
Okay.
You know.
Well, let's see. If,
I don't know.
let's see if Pam Banks has a perspective on the decreasing use of cash in our society.
Well, I think it's unfortunate that there is a decreasing use of cash. But the problem or the fact is that oftentimes people do not have ready cash to use. Now, they can hedge and say, I don't have the cash today, but within the 30 days when I pay my credit card bill, I will have the cash. And that's a good thing, because that will allow you to take care of emergencies or make purchases that you deem appropriate. I would ask that once that bill comes in, since you are advocating for cash, pay it off. Pay it off in cash. And then the second point is that unfortunately credit card companies will get you in trouble, if you will, because they charge unreasonable fees and interest rates on that on borrowing that money. That's why it's important to pay it immediately if you have the cash.
Next phone call is from Columbus, Mississippi. Good morning, Bonnie.
Good morning. Thank you for taking my call. I didn't know that closing out your accounts would affect your credit score.
Okay, can I show you something? There is a box in USA Today, Bonnie, that you might want to find today that says 5 tips to manage your credit card account. And number 2 is be careful about closing your card accounts. And it says closing an account can hurt your credit score. So did you have that happen to you?
Well, I haven't checked because I didn't know about that. But the thing that the problem that I have is that after closing these accounts, one of them has, and I guess it's stupid of me for not reading the fine print, but they raised my my APR up 10 cents. And I called the company and asked them if there was any, they say work with your creditors because, jobs are coming and going and your finances are going down. And I don't know if I should have asked for a manager or what, but they said, no, there's nothing we can do to help. Can they do that, raise your APR on closed accounts?
So you closed the account, but you still had an outstanding balance you were responsible for.
Right.
Okay, thank you.
Under the Maloney bill that just passed yesterday, that will no longer be the case. Credit card companies will not be allowed to charge you interest on a closed account. You would have to pay whatever the current interest rate was at the time you closed the account. You also, under the bill, would have a right to cancel your credit card yourself. Let's see, currently, if you close your current account, it may adversely impact your credit score. But under the bill, you'll be able to close your account, and after if you decide that you want to stay with that credit card company again, then you can, or you can go find another credit card. And then finally, I would say you would have under the bill 45 days for any interest rate increase. Right now in your contract with your credit card company, there's probably a clause that would allow the banks to raise your interest rate at any time for any reason. That's the way it currently is. Under the new law, you would be given 45 days in which to decide whether or not you want to stay with the credit card company who's going to raise your interest rate, or whether or not you want to find another one. And then really my last comment that might be helpful is that if you have a problem with your credit card and you get a no, keep trying. Ask for a supervisor. If that supervisor doesn't help, ask for another one.
Next is Worcester Township, New Jersey. This is Jack. Good morning, Democrats line.
Good morning. I'm calling to make a comment that I had that come to my mind when we were talking about these credits and these credit organizations, especially from the previous credit association representative on the previous program. I think it's noteworthy. About a year and a half ago, 60 Minutes broadcast a program with this man. I don't recall his name, but you could probably look back in the files of 60 Minutes and find it. Where this man, all he does is spend his time devising ways to rip off these credit card holders with different charges of creative charges to up the ante and penalize the credit card holder when they have additional debt for late charges and all these different things. And I suggest that that might be something to look at and comment on as well.
Thank you.
Also, Pam, I am a member of Consumers Union, and I fully support all that you people do, because you really have saved me an awful lot of headaches over the years.
Well, thank you very much. We are very pleased that we have saved you money. In fact, that's one of our missions, is to help consumers. Now, with respect to your question, that is why we're looking for reform, because unfortunately a lot of credit card companies have figured out ways to generate fees that are unreasonable, fees that keep consumers in continual cycle of debt. So that's why we're seeing reforms now.
There's a gentleman quoted in the USA Today story by the name of Brad Nickham. He's described as a consultant who played a key role in developing banks' credit card fees and policies in the 1990s. But he says that issuers' aggressive policies today might be inviting regulatory scrutiny. Here's his quote: "The problem for the card industry right now is that they could be creating their own systemic risk. It must be creating a nightmare for the administration, for the Federal Reserve, and for the Treasury." Mr. Nickham, who now consults mainly with regional banks, says at the very time when we're making it easier on homeowners to reduce rates, the credit card industry is going in the opposite direction. It makes no sense. Next telephone call is from Reading, Massachusetts. This is Richard, Independent Line.
Hello, how are you?
Good morning.
I say on credit cards, I've had credit cards, for one credit card, and I see people, they charge everything, $30, they charge, just go in the stores and they charge. There should be a rate on it where it's going to be like over $500 and more you can use a charge card. But to go in and I see people charging $25, and then when at the end of the month, then it all adds up, and they say, wow, I didn't realize they did that. That's the whole thing, that they got to be more responsible for their charges and stuff instead of just throw plastic out for nothing.
Well, may I ask you a question? If somebody's, you're suggesting that there should be limits placed, but if somebody's fully able to pay, why should there be limits on the amount that they charge?
Oh, you mean on the 500 limit, you mean?
Yeah. I mean, why not let people just make their own decisions about how to use the card?
Well, yeah, you have a point there, Susan. I agree, but I'm just saying, why do you have to charge $25 on a credit card? It's kind of ridiculous to me. That's my personal opinion. But I can see your point of view too. And
Okay. Well, thank you, Richard. You're the last voice in this morning. Ms. Banks, are you predicting that Carolyn Maloney's bill will become law?
Yes, most definitely. You may recall that last year the bill did pass in the House overwhelmingly, and yesterday it got out of committee with bipartisan support.
Thank you very much for being our final guest on the Washington Journal today. We appreciate it.
Thank you.
And thanks to you for being with us on this Thursday morning. Always good to see you. We'll be back tomorrow morning at 7 a.m. Eastern Time. And right now it's time to take you to the House of Representatives. Live coverage on this network. Senate's in session on C-SPAN 2. And if you're interested in the economy, they're working on the financial fraud bill. But here in the House of Representatives, they have on their docket today the National Water Research and Development Initiative Act of 2009. Thanks for being with us.